Also, when would you say an early stage startups become fund eligible or ready for funding?
As soon as they run out of funding. But the other thing is also
True.
because we're in financial services, almost
Hmm.
every founder ends up saying regulatory risk is the biggest risk. But we're in financial services.
Right.
Regulation is
Right.
obvious, right? And so I
Yes.
wouldn't really consider it a risk because you are building in financial services. It's a feature, not a
It's
bug.
already underwritten for. Welcome to VC Unfiltered by Fintech Ki Baat, Dil Se. VC Unfiltered focuses on bridging the perspectives of investors and founders across the globe. In this specific segment, what we've done is we've gone out and asked our community of founders questions that they would like to pose the VCs across the globe. These are essentially questions that they may or may not be able to directly ask the VCs head on. This will enable them to get a unique perspective into the investor's mindset. Having said that, put your hands together to welcome our today's guest, Mr. Osborne Saldanha, principal at EMVC, one of the most well known fintech VCs, which is a US based fund focusing specifically on India. Hey, Osborne, thank you so much for joining us today. It's a pleasure having you here.
Thanks a lot for having me, Shreyas. It's a pleasure to be here.
Great, great. Osborne, EMVC has been really popular in India. I think having invested in companies like Slice, M2P, which are really big names, it would be great to understand your insights and how do you kind of make investing decisions and how do you go about evaluating the startups and all of that. But before we get into the interesting part, let's kind of take a step back and understand a bit about what EMVC is and what essentially you do there. So over to you, Osborne.
Sure. Well, thanks for having me again. Um,
Pleasure.
EMVC basically is short for Emphasis Ventures.
Hmm.
We're a US based fund investing in financial services or fintech globally, or rather, the thesis is to invest globally.
Hmm.
Uh, when it started out in 2018, 2019, the thesis was that financial innovation is being led by India, and the rest of the world is sort of emulating or replicating what India is doing. And so,
Right.
Melissa Frackman, the founder of the fund, started the fund as basically saying, let's get global financial firms exposure to what's happening on the ground in India by
Hmm.
creating this vehicle for them to
Got
take
it.
sort of ownership and all of those things, right? So that's how
Amazing.
Emphasis Ventures or EMVC started. We
Hmm.
started investing since about 2019.
Hmm.
We largely focus on fintech,
Hmm.
and by that I mean that we'll obviously invest in the core areas of financial services, which includes sectors like payments, wealth, banking, lending, insurance, a bunch of those other sectors. But we also believe that financial services is becoming increasingly embedded. And we have a very strong financial infra sort of thesis. And with that infra, we're interested in investing, even in sectors like healthcare, logistics,
Hmm.
SaaS,
Oh,
commerce, and a bunch of these other sectors where we believe that financial services will become a core part of the business offering right from the early days, right?
super.
So yeah, we currently have around 20 odd portfolio companies. Some of the larger ones in the portfolio that most folks would have heard of include companies like Slice, M2P,
Hmm.
Jar, Khata Book, and a
Right.
whole bunch of companies like that
Wow.
across the entire financial ecosystem. So
And these
that's
are the ones that you invested in early stage and now got big.
I mean, most of these companies were started out much before the fund was started.
Hmm.
But I'd say that because the relationship was built fairly early on,
Oh,
by the time the fund was made available, there we could get allocation in, and
awesome.
because of the relationship with the founders, right?
Hmm.
But most of these companies, when we invested, weren't at the scale as they are today, right?
Of
Most of
course.
them were fairly small still, or just about figuring out their
Hmm.
PMF and things like that. So it was a combination of a whole bunch of things, but
Makes
yeah,
sense.
shaped up decently well, I'd say.
Great, great, great. Having said that, thank you for giving a context about EMVC. Let's take a step back. Osborne, you are also a pretty well-known fintech personality across the globe. I mean, I've seen you host events across the country and across the globe as well, and very well known for your insightful posts on LinkedIn. So let's talk a bit about yourself and how has your journey been to becoming a VC?
Sure. I think for me, as with most VCs, I also was an accidental VC. I wanted to
Hmm.
sort of startup in the space, but having a engineering or a tech background
Mm-hmm.
by education, I didn't know how finance worked. I didn't know
Right.
how companies were started, compliance, and all of those aspects. Had
Mm-hmm.
zero clue in them. So I was like, is there some place where I can learn the not so sexy parts of building a startup
Mm-hmm.
or the back end side of things at some firm, and then after 2 years, sort of quit and then start up, right? So thankfully, I was just interning at one of the portfolio companies of the first fund that I ended up joining, which was called Tuscan Ventures,
Mm-hmm.
and they were looking to hire someone, so I was just there,
Oh
maybe right
wow.
place, right time, I guess, and
Mm-hmm.
yeah, was brought on to sort of in some ways build out their tech investing thesis. The fund was
Right.
largely a logistics focused investing fund, and they wanted to get into tech, so did that, and I really enjoyed the investing side of things. And
Mm-hmm.
I, in that journey, also realized that I probably don't have what it takes to become a founder,
Mm-hmm.
And so over the years, I've only enjoyed working with founders. So Tuscan Ventures, it's a family office of one of the founding families of Yes Bank. Worked with
Mm-hmm.
them for a long time.
Oh.
Then in 2019, moved on to Xiaomi,
Mm-hmm.
where I was leading their fintech investments in India,
I
Southeast
see.
Asia, and Europe. Through that, got a whole bunch of exposure to global markets as well in financial
Mm-hmm.
services. And more importantly, I think decision making of how companies like Xiaomi make decisions
Mm-hmm.
for their various businesses globally, right? So that happened, and in 2021, I ended up joining Emphasis Ventures, where I'm at right now. But that's like the professional arc of mine.
Mm-hmm.
And through COVID, I sort of started writing a newsletter,
Oh.
and that newsletter called FinTech Inside ended up
Mm-hmm.
getting decent readership or subscribership. And so through that readership sort of grew into an organic community.
Mm-hmm.
Uh, and right now, along with the newsletter, which I also try to publish more frequently than I used to,
Mm-hmm.
uh, I also organize these community meetups for fintech founders, fintech investors, product managers, and folks like
Oh,
that.
great.
So far, I've hosted over 10 of these sort of meetups in
Wow.
Bangalore, Delhi, Bombay, Singapore, and Jakarta as well in Indonesia. So this has been sort of really amazing to see how this random person on the internet is calling people for a meetup, and almost 200 people show up for each of these events. So it's kind of
Amazing.
fun.
Wow.
Been kind of fun.
That's brilliant. That's brilliant. Any tips and tricks for people who are aspiring to be a VC?
Tips and tricks to be a VC. I think just be curious. That is, I think, the most
Mm-hmm.
important skill you need to have. And with curiosity comes humility as well. And just keep trying to understand 5 layers down as to why a certain behavior exists or it will directionally be a certain way, right?
Right.
And with curiosity comes humility, and humility to understand user
Mm-hmm.
behavior, how to be in service of founders, how to interact with founders, and
Makes sense.
all of those aspects. So I think curiosity is super important. If you're
Mm-hmm.
not curious, then none of the other skill sets really matter. You can be great at analyzing companies, you can be
Mm-hmm.
great at networking, but if you're not inherently curious, then I think it's tough to be a VC, in my view. At least a good VC. You can be a VC, but if you want to
Makes
be a
sense.
good VC, then
Perfect. Perfect. Thank you so much. I think that makes a lot of sense. Having said that, let's move on to the part where we ask you the questions that our community of founders have, trusted us with, and let's hopefully get some insightful answers.
let's do
Uh,
this.
let's start with it. So, first question, and this is in no particular order, right? These are all randoms. You can pick and choose. So, the first question is, what's your funding advice for early stage fintech startups? Like, what do you advise them on? When should they raise funding and all of that?
When should they raise funding? With so how, I think I'll address it maybe in two parts. One
Hmm.
is how should they go about building a startup, and maybe then second is with regard to fundraising, I
Perfect.
guess. With regard to starting up, I think if there
Hmm.
is a problem that they identify in financial services that they believe is large enough, and
Hmm.
that they've done a decent amount of user research to find
Hmm.
out unique insights. This unique insights bit is so critically important for
Right.
in financial services or generally in starting up,
Mm-hmm.
that I don't see too many founders having a unique insight when starting up.
Right.
And the reason I say this unique insight but is important is because
Mm-hmm.
ideas everyone has. Everyone is
True.
facing the same kind of problems largely, right? But if
Mm-hmm.
you don't know why it's happening, if you don't know where it's happening, if you don't know
Mm-hmm.
how to solve it, all of those aspects, then you don't
Interesting.
have a right to win. You don't have an edge over your competitor. I mean, everyone has the same ideas, everyone has it. But what makes you special?
Makes
What gives
sense.
you the right to win? So I think finding that unique insight is so critically
Unique
important
insight
in
should
my
be there,
view.
right?
Yeah,
Mm-hmm.
so it's very important in my view, especially at the early stages. Beyond that, growth stage and all is largely execution. You have teams and all of those things, but
Mm-hmm.
very early stages, unique insight is important in my view. With
Got
regard
it.
to fundraising, I think given the current macro environment, it's
Mm-hmm.
kind of tough for early stage companies to raise. And but I think
Exactly. Mm-hmm.
the mindset shift has happened in India,
Mm-hmm.
especially at early stages. What I mean
Mm-hmm.
by that is until maybe a quarter ago, that is until uh, July, August, September quarter, founders were still of the mindset that they can raise a couple of $1 million
Mm-hmm.
at outrageous valuations. And I think that
True.
mindset is kind of changing, especially
Mm-hmm.
because for early stages, you don't need millions of dollars to
Right.
become to prove PMF or to build your idea or
Exactly.
anything like that. And so I guess raising a little bit, proving your profit, proving your PMF
Mm-hmm.
is kind of important. And so raising a few $100,000 at a sub 5 million kind of valuation
Mm-hmm.
is not bad. It's good, but it's also the only places where you'll get kind of capital these days.
Makes
And
sense.
so that mindset shift is happening right now, and I think and I hope it sort of lasts for some time. I don't think
Right.
too many founders are getting more than $1 million in terms of early stage funding right now, and that's important, I think, for founders to figure out.
Makes sense. Makes sense. Also, when would you say an early stage startups become fund eligible or ready for funding?
As soon as they run out of funding. but but jokes aside, I think it really depends on the speed of execution.
Mm-hmm.
If it's different for different companies, and I don't want to generalize based on where they are in their journey and all of that, but I think
Mm-hmm.
broadly a good yardstick would be how fast you want to grow, right? If
Right.
you believe that you have captured lightning in a bottle, by that
Mm-hmm.
I mean have you found really strong PMF? Strong
Mm-hmm.
PMF could mean different things for different people, but in my view, I think it should be that how fast are you growing by in terms of
Mm-hmm.
user adoption and retention. If you are seeing those things happen and
Mm-hmm.
users are
Makes sense.
trusting you and coming back month on month to transact on your platform, uh,
Mm-hmm.
that in some ways translates to you having lightning in a bottle. How do you make sure that
Right.
you capture that lightning in a bottle and continue to scale with that
Mm-hmm.
sort of power? So speed of execution is super important.
Makes
Unfortunately,
sense.
right now that speed of execution is slow, largely because of
Mm-hmm.
factors outside of a founder's control, right? So, for
Mm-hmm.
example, NBFC partnerships are tough to come by. Integrations
True.
with banks or wealth managers are tough to come by.
True.
So all of those things are outside of a founder's control, and so speed of execution generally is slower right now.
Makes sense.
That I think is impacting a bunch of founders. But I
Mm-hmm.
think whatever is in the founder's control, and if you are able to increase that speed of execution, uh, it really depends on how much then you need for your next phase of growth after you've proved PMF. But it's again
Perfect.
very subjective and it's very dependent on each company. So
Of
hope
course.
I've been able to generalize it enough.
Yeah, I mean that does make sense. One really interesting question that I love to ask VCs is that do Indian VCs fall for FOMO while investing? If yes, what's the best way to create a FOMO?
Uh, so politically incorrect question to ask, but it's
If you
I
want, we
don't
can skip it.
no, I'm sure I'm okay to answer it. I think for
Uh-huh.
me, at least from my vantage point, I think
Mm-hmm.
VCs are people, and people obviously fall into FOMO sometime or the other, right?
Mm-hmm.
It just works even with founders, where founders are seeing, let's say, competitors build a certain product, and they're like, "Why don't we have this product? We should build
True.
it as well." That's a
True.
FOMO over there as well.
Mm-hmm.
So I think people inherently will feel like they're missing out on something if they don't have it, right?
Mm-hmm.
And VCs also more so. I think it's not just with Indian VCs ecosystem. I think it's a global
Mm-hmm.
thing, only because of human sort of tendencies, right?
Of course.
So FOMO is real, and more importantly, I guess it's when uh, like I am seeing, for example, my peers doing deals, and I'm like, I'm not doing any deal. Am
Mm-hmm.
I wrong? Am I stupid? Am I not seeing the right things? And
Mm-hmm.
so then I will have that FOMO, and I will end up doing,
Right.
stupid things about it. So
Makes
FOMO
sense.
is real. It just happens. It's also cyclical, right?
Mm-hmm.
And so 2021 was a major FOMO year, but I don't think 2023 is the same sort of
True.
FOMO anymore. So yeah, it's very cyclical.
Makes sense. Uh,
And
going.
sorry, just to
Yeah.
close out on that,
Yeah.
I think the other thing also is because early stage investing is
Mm-hmm.
fraught with so much information asymmetry,
Right.
right? It's very easy to fall into FOMO,
True.
where there is very little real hard data to go by when making investment decisions, right?
Mm-hmm.
The real information that you only have when investing early is market size and maybe founder background,
Right.
right? There's beyond that, there's only so much really that you have in terms of hard data to
Mm-hmm.
analyze a company or to decide with full conviction on a company.
Right.
In public markets, it's completely different. In
Mm-hmm.
public markets, you have historical information of the company, you have historical price information of the company, and there's so many other data points where
Of
you
course.
have such kind of decision making platforms, right? And because of that information asymmetry, right, it's just the
Mm-hmm.
way the stage of investing sort of functions.
Makes sense. Makes sense. Going back to something that you really said about 23 being different and a lot different from 21, what do you think changed over the last couple of years? I mean, my perspective of the investment scenario in 2023 that has been that it has been a really cold, I wouldn't say cold, but a really calculated year for the VC, right? Each and every deal that has happened is very calculated. You could understand why that investment was made and how it was made. I mean, there is a clear visibility on how the decisions are made. So,
I
yeah.
think, in my view, it's not just a 2023 phenomenon.
Mm-hmm.
That I mean, you can't just look at this year in isolation and say that investors have become, let's say, a little risk off.
Mm-hmm.
It's really got to do right from the start of COVID, where
Right.
because the people weren't spending enough, there
Mm-hmm.
was quantitative easing that was introduced in the US, and
Mm-hmm.
so people were interest rates were brought down significantly, almost to zero
Right.
in the US, but very low in India as well,
Mm-hmm.
because people were spending a lot while sitting at home. They're obviously they were able to increase their bank deposits while not spending too much of their deposit amount, right? And
Mm-hmm.
therefore, I think along with people's savings increasing, but people's spending also increasing,
Right.
since 2020, that's all increased, right? And
Mm-hmm.
that's just the financial aspect of it. Then in 2022 and 2023, interest rates increased, which
Mm-hmm.
made a lot of banks reduce liquidity in the market, made people a little risk averse in terms of accessing credit, all of
Right.
those aspects. So I don't think 2023 can be looked at in isolation.
Mm-hmm.
Right from 2020, all of this has been happening. But aside from that, what's also been happening is this whole war situation and political situation and all of those things, right?
Right.
Uh, the world has only become a lot more extreme since 2020 again.
True.
In again, maybe in terms of politics or whatever the case may be.
Mm-hmm.
In 2024, a record number of countries will be going into elections, which is why there's a whole bunch of uncertainty around which, let's say, is the same guard going to be continuing with in power post the elections or not, and therefore
Mm-hmm.
that is another decision making consideration as well, right?
Right.
So given all of these aspects, there's a lot of risk in the market, which is inherent, is latent.
Mm-hmm.
It's not real just yet, right? And because there's that risk that is just latent, people are becoming a little more calculative about their own decisions,
Makes
keeping
sense.
in mind a lot of this uncertainty that's around us at this time, right?
Right.
So it's a whole bunch of things. No one knows
Mm-hmm.
what really is going to happen, and therefore people are becoming a little more calculative in their decision making.
Makes sense. Uncertainty
That's
kind of.
my view. It's probably completely different and wrong over here, but that's my view on
No, no,
the
that does
market.
make sense. I think uncertainty definitely or what is introduces risk averseness as a behavior in humans. Having said that, let's move on to the next question, right? This one's really interesting, and I mean, I get different answers from a lot of people who would want to understand what exactly your perspective is here. How do you evaluate an early stage startup that does not have an MVP?
Great question. I've been asked this so many times. Uh, my response to this is
Mm-hmm.
twofold. I think obviously the whole aspects of how large is the market that you are targeting, what's the
Mm-hmm.
user behavior like, what's the founder background, all of those things obviously matter,
Right.
and those become filters in your decision making, at least for me. But the two
Mm-hmm.
main things that I look at is this whole unique insight bit that I talked about, right? Is the
Right.
founder teaching me something new about the space that they are operating in, right?
Mm-hmm.
And it's very easy for me to say that, I mean, now I've been in venture and in fintech specifically for 10 years, right?
Mm-hmm.
And so not a lot is new to me, if I may put it that way. And
True.
so I know that I have that bias, right?
Mm-hmm.
Where I know how SMEs function, for example, and I know that maybe a plain vanilla loan for a small business will not
Mm-hmm.
work out, right?
Mm-hmm.
But I still ask the question to founders as to what is their unique insight, and they'll
Mm-hmm.
usually tell me it's the same stuff that I already know probably. But
Right.
then even then, I will, because I have that bias in my mind. My next question is, or rather, I end up giving a suggestion to the founder. I say, okay, maybe small business lending will not work. Try this out instead, or try doing a discounted model instead, or some other model instead.
Mm-hmm.
And what I look for by saying that is if the founder is going into the market and trying it out or has already tried it out, right?
Mm-hmm.
This shows me their speed of execution, which is
Right.
extremely important. In If there is
True.
no speed of execution, the company is basically dead on arrival, right? And so, because not everyone tells me a unique insight all the time, here you hear.
Yeah, yeah. We can just pick it up from there if there is no speed of execution.
Yeah, I was just saying that because I can almost tell that there is no unique insight, but if I like the founder, then I will give them a suggestion on maybe an approach to the market or a product or something like that. If they've
Mm-hmm.
already tried it, they'll already tell me on the call itself or in the meeting that, hey, I've tried this, it doesn't work. You're wrong, right? But if they've not tried it, I look for how fast they go into the market, they launch, they get user feedback, and then come back to me and say, hey Osborne, you told us this, we went
Mm-hmm.
ahead and tried it out. You're stupid, it does not work, or hey, you were right, it works a certain way, right?
Got it.
But what I'm again looking for is just speed of execution. I don't care if I'm right or wrong. I just want to see whether the founder is has that bias for action and is looking to go out into the market and execute. So I think when I'm looking at early stage startups that don't have an MVP, that don't even have a product built,
Mm-hmm.
that are still in their early days of just ideating and all of those things, I
Right.
just look for unique insight and speed of execution. Those are make or break for me usually in a conversation.
Makes sense. Makes sense. I think that really puts a lot of insight onto this specific question. I think I have got a lot of different answers, but this one really makes sense. Right? Unique insight is something that actually is something that will make or break the startup. Right? If you are just another credit card company or just another whatever lending FLDG company or BNPL company or whatever, that's not going to make sense unless you have something unique that you can do that will essentially position you differently or give you that edge. And at early stage, I think that is one of the metrics. And of course, as you said, founders background is also something that really kind of adds a value to that as well.
Yeah,
uh,
the unique insights bit. Sorry, just to close out on that, but
Mhm.
I think in the age of, let's say, even ChatGPT and
Right.
everything, ideas are dime a dozen, right? You
True.
go out into the market and you ask anyone, even the sabjiwala, for example, they will tell you
Mhm.
how they want a loan, right, and how they will be able to service a loan and all of those
True.
things. So they know everything, and therefore every founder has the same idea effectively. But again,
Mhm.
it's what is that right to win? Even on an execution perspective, uh, let's say your competitor of a founder or a company
Hmm.
is able to raise, let's say, $10 million and is able to hire like a few hundred people in their team, they'll be able to
Right.
execute much faster than, let's say, a company that hasn't raised a lot of money.
Right.
But what that company won't have, the company that has raised 10 million, is the unique insight about the user behavior, right? And
Hmm.
that is always a better right to win as opposed to everything else, right? And
Got it.
if the founder is not willing to go out in the market and understand user behavior, ask
Hmm.
five whys as they call it, right?
Right.
Understand it right up to the fundamental principles, you're not going to have a clear right to win, and therefore you
True.
won't succeed as a founder or a business.
Makes sense. Perfect. Having said that, let's move on to the next interesting question. What exactly are the key metrics that you look for in a founder's pitch as a VC? Must haves.
Metrics, I think. Um, I actually don't look for I don't look at their deck usually, although I do my own
Hmm.
research before the call. But in the call or in the meeting, I usually focus on the founder's personal motivations, and I purposely ask sort of long term questions. My questions would be, for
Hmm.
example, um, um, why do you want to start up in this space from a personal motivation perspective, uh, that I mean, most people that come to us, everyone has a great background, everyone has a stellar sort
Hmm.
of logo profile on their background and things like that, right? And so most of these people
Right.
can get a job anywhere they ask. And but my question is
True.
always, why do you want to spend 7-10 years of your life grinding as a founder, right? And I purposely
Hmm.
push that long term thinking, but usually people are like, oh, I've just thought 2 years in, I've just thought 3 years in. So that's something that I automatically see from the first question itself,
Hmm.
right? Second is, I think,
Hmm.
again,
Makes
this
sense.
unique insight bit where I delve fairly quickly
Hmm.
into their unique insights and I try to understand where they're at. The third thing, which
Right.
just shocks me most of the time, is I ask them what are the risk factors in scaling this business, and almost
Hmm.
90% of the founders tell me this is the first time they're asked this question, right? Which means that they've never
Right.
thought about risk at all or downsides. It's usually the
Hmm.
risk that most founders end up thinking is, do I have enough savings to survive 6 months to a year of building the startup? But and that's personal, which is
Hmm.
all great, and you need to have all of those savings. But as a business, what are the
Right.
risk factors? And if the founder has not thought deeply about risk factors, it's kind of
Hmm.
a tough spot for me to push forward for them.
Makes sense. Makes sense. I think that's pretty interesting. Uh, I mean, given the fact that you deal with early stage startups, I'm sure a lot of key metrics at that point of time would be really the metrics that actually normally go index, right? It would really not be that value adding versus a question. I mean, the metrics that you kind of look at, right? And unique insights, I
Yeah,
see it repeating again and again. I think I need to kind of note it down somewhere and deep dive into how exactly does that also really fit into the picture and from a
yeah.
founder's journey.
Because so also with this metrics
Hmm.
question of yours, right? For an early stage
Right.
company again, which is just at idea stage or has barely built a product or anything like that, I mean, you cannot expect to have
Hmm.
metrics just yet, right? They would have maybe launched it with a
Of
couple
course,
hundred
exactly.
in closed beta and things like that. But I think
Exactly.
almost every startup that comes and pitches, if
Hmm.
I mean, everyone will have a good team on their team page. They will have a big TAM
Hmm.
on their TAM page.
True.
They will have good projections on their projections page. I mean, if
True.
you're going and projecting a $5 million revenue business in 7 years, I mean,
Hmm.
no one does that, right? So everyone will
Right.
have only the most rosy picture. Everyone will have thought about all of these
Exactly.
things, right? So what is their right to win if everyone looks the same, you know? So
True.
again, that's where at least I focus on, or yeah, we focus
Makes
on
sense.
in
And I think
EMVC.
hmm. No, makes sense. And I think what really kind of takes the cake here is the fact that you ask the question about the long term risk, right? Like what happens if you scale this? I mean, I don't really, as you rightly said, I don't really think people actually think about it or even don't know how to think about it. As in, what kind of risks would that involve?
Yeah,
Like, अगर आप ये BNPL बना रहे हो and you scale up to, let's say, 10 million users, what are the risks that are going to be there? Maybe a regulatory risk or whatever other kind of risks that will jump in from scaling these kind of models.
Yeah, two things right on that. With regard to risks,
Hmm.
my question is more around, is the founder thinking about all of these aspects or not, right? We all don't
Hmm.
know what will happen in the future, and no one can predict it well,
Right.
right? We also
True.
can't say what regulations will come in the future. We can't say what, let's say,
Exactly.
war will happen in the future and how your business will be impacted. So I'm
Hmm.
not I'm not so fussed about how accurate your risk predictions are, right? I want to know whether the
Hmm.
founder is actually thinking on those lines,
Have you
and have
actually
they even
thought about
considered,
it or not?
yeah, have they even considered something like that or not, right? No one knows whether it'll happen or
Makes
not.
sense.
The other thing is also,
True.
because we're in financial services, almost every
Hmm.
founder ends up saying regulatory risk is the biggest risk. But we're in financial services.
Right.
Regulation is
Right.
obvious, right? And so I
Yes.
wouldn't really consider it a risk because you are building in financial services. It's a feature, not a
It's
bug.
already underwritten for.
Yeah.
Yeah.
So that I wouldn't count as a risk factor.
Hmm. Makes sense. Makes sense. Perfect. I think this brings us to a last question. It's a bit speculative, but I think I'm super excited to hear your perspective on how you see this. The question goes, if you were to bet your money in one, two key areas of fintech over the next 5 years, what would it be?
I think one is going to be wealth manufacturing. Sorry, by
Hmm.
wealth manufacturing, I mean wealth product manufacturing. So at the AMC level, for example, that is
Got
something that
it.
I would definitely want to take large bets on.
Hmm.
Um, so that is one. And second is, I think there's still so much to be done on small business credit that
Right.
I think, yeah, there's so much formalization of the economy that's happened that I just
True.
believe that there is some opportunity, some product that will come out over there that will just create a very large business. That whole space has not seen a single large business being built to date, right?
Definitely.
And so I think maybe time could be now, you know.
Makes sense. No, I think the MSME segment specifically, from a financial inclusion perspective, is still yet largely unsolved for from even an underwriting perspective as well as from various other products customized for them from a financial services, the bouquet of financial services products. So I think, yeah, I've been super excited to see what that space brings up. Till now, I specifically seen, I would say, mainly lending based products with. Digital underwriting models, partially digital. I wouldn't say it's completely digital yet. Partially digital underwriting and onboarding models, but we still have to see scale in that segment. So yeah, any interesting products or startups that you have seen in the space, the MSME space?
Um, In the SME space, there is
Hmm.
one company called Creditail, which is doing some interesting bits
Hmm.
for the grocery retailer,
Hmm.
where they are partnering with the anchor brand and providing credit to the last mile retailer for grocery businesses. Right. So
Hmm.
that is one. There's also Fundly, which is doing
Oh
this
yeah.
mainly for the pharmacy network in the country, where
Hmm.
again there are larger check sizes, very strong need for growth. There's a lot of formalization over there, uh,
Makes sense.
data availability as well. So I think,
Hmm.
at least on the SME credit, because the SME is already so underserved, but
Right.
you can't just directly provide credit only to that SME. You need to get the data from somewhere, and some
Hmm.
parts of getting that data is partnering with either the distributor level or the anchor brand level, right? And
Right.
so there are interesting businesses being built over there. ProcCap as well on the same
Oh yeah.
side, doing it for white goods or
Hmm.
consumer durables businesses. So large businesses that are being built out of targeting one specific vertical in the industry and just going after that. So
Definitely. I
interesting
think this
ones.
will be an exciting space to look forward to in the next couple of years. Really curious about wealth product manufacturing. What exactly do you kind of see happening there?
So my view is that I mean, if you would have read any RBI report over the past decade,
Mm-hmm.
you would have seen that physical assets has been a large part of any Indian household
Right.
asset profile, right?
Mm-hmm.
Gold and real estate has typically been north of 70% of the overall assets
Right.
in an Indian household.
Mm-hmm.
I believe that that is starting to change now,
Mm-hmm.
right? And the asset profile is increasingly becoming financial,
Mm-hmm.
right? And by financial, I mean this will include things like mutual funds. This will include your equity investments or stock
Mm-hmm.
market investments. Will
Mm-hmm.
include all our fixed income products that are available. So, a whole bunch of products that can be built out for the financialization that's happening in Indian household assets. And so, I believe that that will be an interesting space, not just for new products that are being created, but just better products, better transparency, better pricing, cost ratios, all of those aspects. There's a lot still to be built over there. I don't think we've even scratched the surface of what's possible.
Makes sense. Perfect. I think this was about it for today, Osborne. Thank you so much. Learned a lot from you, and I think got some really unique perspectives. Something that I really found interesting, two things specifically in our conversation. One was unique insight metric for evaluating early stage founders. I think that's an absolute necessity to have. If specifically if you're raising funds as an early stage founder and you don't have a unique insight, I think you're losing the edge in kind of proving yourself, as well as actually being able to make the best out of the market. And the second piece, right, is the risk wala question that you asked. This kind of gives gives us a unique insight on how the founder thinks from a longer period, longer perspective. And I think that really kind of fits the bill from a evaluation perspective. So thanks a lot, Osborne, for doing this. It was really a pleasure.
Not at all. Really appreciate all the insightful questions from you and your audience of founders and all of that. I hope it's added some value to at least early stage founder thought
Definitely.
processes.
Thank you so much once again. Cheers.
Thanks.